What's up, guys? Mikey here. I'm gonna I don't even know what video number this is of the little boot camp that I've been recording. See, this is gonna be episode 3. I haven't made a video in a while. The first video actually got a decent amount of views. We had like 70 views. The second one didn't have that many views, but um, I just thought I would come on and make another video because it's kind of fun for me, and it is good to just kind of refresh like how I want to trade my model, because I do tend to notice that like if I trade very mechanically, I do start to trade more discretionally, and sometimes I need to bring it back in. But that's actually um what this video is going to be about. Is going to be about discretion. And obviously I've only been in the markets for like less than a year. Like it's going to be a year in March. And the first 6 months was me just crashing out at market open every day. So like I like don't have that much market experience, don't have that much discretion, but I'm gonna kind of just show you guys some examples of it, because like in my opinion, discretion isn't like just like you just know where price can go. I think it's more you begin to subconsciously understand where price is going to move based on just patterns and based on just like seeing so many setups that you're like, oh, I think I could enter in early here. I just feel like it's gonna go up, and it's like looking back, you're just like, oh yeah, I just like thought it was gonna go up. But like if you like really probably thought about your thought process, you're like, oh, like I just understood how we like swept an internal low and gave like a good reaction with decent displacement, and I knew I could like front run the inverse for rally gap. Like it's like that's not discretion. That's you like using ICT terms or whatever your model may be. So to refresh my model first mechanically, I need a 5/50 minute for value gap after 9:30. 2, need a retrace, preferably into EQ. 3, highest time frame IFVG out, or CISD, or clean displacement. So in my model, I use some discretion. Where do I use discretion? Out of these 3 steps. The first one is a must, or no. The first one, no discretion. This means like there needs to be a 5 or 50 minute gap after 9:30. Like that's like, if you guys hear fighting, those are my dogs, by the way. But this is like no discretion. Like I need a 5 or 50 minute for value gap after 9:30. That's not like something that I can just like try to use discretion with. Like that is what I need. And then 2, I need a retrace into that gap. So this is like no, well, okay, there could be a little discretion, and it's only if ES or NQ sweep sweep and oh my gosh, and the other doesn't. So like an SMT inside of your value gap, I'll try to find an example of that. And then the third one is most discretion, where like my entry, because sometimes the highest time frame IFVG will be bad RR. So then like sometimes I don't want to take that. So okay, I'm gonna delete this, but just keep that in mind. Of just like that's how I use my discretion. I need the gaps, need a retrace, but if there's some sort of SMT, we could work around it. And then the entry is the most flexible, but still it's like important to like not just like enter off anything. So today's gonna haunt me for a while, but I'll kind of explain why. So first off, we did have this nice market open trade, but you can see the gap was formed like this is 9:25, first 5 minute candle. So like sometimes I do use these gaps, sometimes I don't. I really don't like trading this close to market open. Looking back, I really wish I took this trade. This was so clean to previous day high. I did wish I took it, but it's like, so like this is where the discretion part, it's like, oh well, the gap was formed, like it was formed at market open. Is that after 9:30? I don't know. I don't use discretion there, so I don't take that trade. Would this trade would have worked? Yes, but Most of the time I get cooked on market open. So today I wanted longs, and we honestly just started running, and then we just started dumping, right? Um, so so you can see here, let's go back here, come to here. So we're just displacing through all these 5 minute gaps, but we actually had a 15-minute gap down here, right? And this was formed at the 9:30 candle, so that worked. And then we also had a 1 hour gap. So so this would be like step one, 15-minute fair value gap after 9:30, no discretion. Step two, retrace. We're in the gap, like little discretion. Like I'm like I would pretty much say there's no discretion on that. Like you need to retrace. Three, the entry. What was my first entry? I tried to soup this midnight level. I had a limit right here with a 5 point stop. So you're gonna be like, why would you just set a limit? Like that's crazy. Or maybe you don't think that's crazy. But I was just, it's like you're probably asking why. Like in your last two videos, you mentioned nothing about like souping levels or anything. Well, this is discretion. It's not like discretion. Like it's not like this is, but like it's kind of discretion. So the reason I took this is because these key opens midnight, 9:30, 8:30, 1800, 10 o'clock open, they're very reactive. And a lot of times price will come back down to them and react very, very strongly. And if they're aligned, whether they're confluences, you can set a limit. So what was this midnight level aligned with? 0.705 on the fib, so OTE. It was also inside a 15-minute fair value gap that was formed after 9:30. And then also my bias was bullish, so I was willing to do that, right? But you can see what happens. I'm like, I get stopped out, and then it begins to run, right? So I got stopped on that. I was pretty bummed. So then if we look on this again, you can see that technically the highest time frame gap that we would need to inverse is this 5 minute, right? Like this 5 minute, we have we have this big 4 minute, we have this 3 minute. So yes, like picture perfectly that those would be the entries. But obviously, so I tried the midnight with discretion. The reason it didn't work was because my stop was bad. I should use a 10 point stop. But I also, my second entry was off a CISD. I entered on this displacement candle because we broke above this order block, left a fair value gap. So this is like where my entry was, and I legit wanted these highs. So, but the thing is, you're like, okay, why would you long into an unmitigated 3 minute with in a 5 minute above? Discretion. I just there's so many things that were telling me that price went. First, we built up LR all the way up here. Over high time was bullish. Reacted off midnight level. So all those things are going on my head subconsciously, and in my head I'm just like, oh, like I can enter early here. It's not me just like being like, oh, I just like know where the market goes. It's like, no, it's just patterns I've picked up. And then you can see so I ended up getting break even on this last swing low, and then bro, you could just see that market just rips all the way up. So I watched this. This was hard to watch, but yeah, I just wanted to show you guys this example of how it's good to like have a strict model of like I need a gap, I need a retrace, I need this, but sometimes like if you can use discretion and get a crazy entry like this, like let's say I did use a 10 point stop, then it's like look at the RR. I mean, I wouldn't have held that long, but if you held full TV, that's 13R versus probably my realistic entry would be like up here. That's like a 1R. That's a huge difference. And obviously, like this midnight level trade is like a lower win rate. But when you start to pick up patterns and notice things aligning, like you gotta like take advantage of that. Let's see. Honestly, I feel like there was another. Why am I lagging? Let's see. I'll try to find like one more example of a 5 minute continuation. Monday. Friday was okay. Friday's a good example actually. So Friday we're here. So we just printed down all these 5 minute gaps after 9:30. No discretion. We have those. We have an external drawdown here. So I'm like, okay, I just need to retrace into these gaps, and I'll go short, right? But what happens on our way up? We form 1 5 minute, 2 5 minutes. Usually for my entry, I'm taking the highest time frame for value gap and like the most discount or premium one. So I would have to enter off the inversion of the second 5 minute gap. So if I waited for that, I wouldn't be able to take it. Why? Because we already swept the internal low. It's like that would be my break even. And then it's like, I mean, the trade does play out if you were to take it here, but would be breaking my rule. I'm going to take it here, right? So if I use no discretion on Friday, I wouldn't have taken a trade there. So if we scale down, you could see, I don't like remember my exact entry, but I know I didn't take the 5 minute. Yeah, look at this. So we're in the gap right here, right? So a 5 minute IFEG entry would be all the way down here. But it's like, in my opinion, I don't need to see price close all the way down here for me to know it's going below. There's plenty of things before that, sorry, I just ate, that will tell me that price is going to go lower. So off these few candles, this isn't great, right? This is kind of choppy. So then we get a push up right here, right? So I'm like, okay, if we're bullish, we're going to keep going up. If we're bearish and close below this will become an order block. And then what does that mean? That can give me a protected stop. So if we watch here, boom, we get a break of structure off, or we just close below this order block. So that's already a protected area. So why do I know that? That's just based off market experience. Understanding that up close candles support price going lower, and then the other way around. So like I said, I don't remember exactly where I entered, but like, let's say like I could have entered off this, which is right in the 5 minute, which is risky. But if I understand drawn liquidity, understand order blocks, understand that market wants to go lower, I don't need to wait for a full 5 minute. I could just see that, oh, bearish or bullish structure, we tried to move up, it immediately got disrespected. We're supporting bearish order flow, I could front run that. So you could have entered off there, right? You could have entered off this. You could have entered off this. This would be more like a CISD. You could enter off this. Stop above the order block, protected. Target previous day low. You could have entered off that, right? And then I don't think there's really any other entries you could have had. Like, you maybe could have found an entry off like this. You could have done something like this, honestly. Like, this isn't bad either. But the thing is, if you entered off the 5 minute, your stop would be so like high, and like it's just really not needed. But the thing is, when you're learning, you can't just think you could trade discretionally. You have to be more pattern based, and then it's through the patterns that you learn discretion. But like, you know what I mean? Like that, the different, when you add a little bit of discretion, my entry was either down here, which, I mean, it ends up hitting, which is, but it's like, that's just not smart to take a trade before or after this low got taken, because there's no break even, versus I take the trade here. Let's say here, even here, a 1-to-1 is before the DOL. That's clean. I'm break even here, risk-free trade, flushes down. So those are like just two examples of discretion, and just showing how like a very simple model isn't really that simple. If you add appropriate amounts of discretion and flexibility within a model, it's like, people get obsessed with the word model and think it's like, oh, this model makes me profitable. It's not. It's because it's like, if I just pattern trade this every single day, like it wouldn't work. Like I would lose. I mean, honestly, this model is pretty high win rate, it's pretty high win rate traded as a pattern. But if you just add that little bit of discretion, your RR can get so much better. Your win rate could get so much better. And like just having a little bit better RR and a little higher win rate, I mean, after I think 100 trades, after a year's worth of trading, like that adds up. And then, I mean, this is another example too. Like, retrace in 5 minute, we get a CISD here, but like, does this like really look like a good, just like this just looks messy, right? So you can use discretion to know like, okay, we have a CSD here, but I'm not going to take this trade. Even though it plays out, we can see just how choppy it was, right? Like you can use discretion to understand like this is just a choppy retrace, choppy like CISD, like there's really no manipulation into this gap. Like you can understand how like this is a horrible retrace. Like we barely tapped the 5 minute, even though it played out, but it's like, that trade mentally looks taxing. Let me see if I can find another quick example. Let's see here. Let's see if this, so like this like looks like an example to like not take an entry. Yeah. So here it's like, okay, like, yeah, like that looks like a solid retrace. We got like some clean displacement out, but just like look at this junk all before that. Like that just like doesn't look nice, right? Like that doesn't look nice at all. Did we hit equilibrium? We didn't hit equilibrium of the range. So like mechanically, yes, we got a retrace. We got CISD, break structure, whatever you want to say, displacement. We have strong draw and liquidity, but discretionally we didn't have a nice retrace to equilibrium. We don't have a really good CISD, and then price just chops and stops you out. Like I know this is Christmas week, but still, like just that little bit of discretion just saved you a loss. You know what I mean? Like, wow, my trading view is lagging. But yeah, that's pretty much it for this video. Super simple, not really technical, but just kind of introducing the idea of like it's you like discretion isn't this like mystical thing that like people just have and other people. I mean, it is, but it's more like it's just market experience. It's like, oh, like how long have you been trading? I've been trading for 5 years. Well, obviously you're gonna have really good discretion. If you follow your rules every single day for 5 years, you're gonna just understand how the market moves on a different level compared to me. You know what I mean? Like I don't. Like I've only been trading for a year, and I'm picking up these little things like, oh, you need a good retrace. Oh, you need strong draw and liquidity. Oh, you want this sort of retrace. Like but like I'm sure there's a million things that I haven't even understood yet. But like you only learn discretion from having a really basic model and you being able to pattern train it every single day. And then your losses, even though it to you was a perfect trade, you can go back to those losses and be like, oh, there was like an opposing SMT. So now I know when there's an opposing SMT, I won't take the trade. And then when that happens next time, you might not be in your brain like, oh, opposing SMT. You're just gonna be like, oh, this trade doesn't look all right. And that's discretion. It's nothing crazy. And I could be wrong. I don't know. I've only been trading for a year. So if someone was like, no, discretion actually is something else, I don't know. But that's pretty much it for this video. Pretty explanatory. Kind of didn't really plan anything I was going to talk about. But I'll start posting videos more. I just got my computer fixed. And I'm going to go live tomorrow. So yeah, let me know if you guys have any questions.